I'm looking at some of your calls here. You're favoring options to ride what you think might be a fairly volatile next few months here in the equity market. Can you elaborate a little bit more on that strategy?
Sure. I think that comment was in the context of the upcoming launch of our first alternative investments fund from Franklin Templeton in India, the Franklin India Long Short Equity AIF. I think the point I was making was that equity indices in India are at an all-time high, reflecting the rising optimism about the growth momentum that we've seen recently and which we expect will continue over the next 12, 24 months and beyond. GDP growth rate should come in well above 7% in fiscal 19 and accelerate thereafter, consumption being an important growth driver. More importantly, we believe that corporate earnings growth, which has been somewhat lackluster in the last few years, is beginning to pick up fairly good momentum. And the earnings growth expectations currently for fiscal 19, ending in March 2019, is at about 20% for the index bellwether companies. But I do believe that international factors can contribute to elevated volatility in equities globally, and that would include, obviously, emerging market equities and Indian equities over the next 12 months. And the principal reason for this would be the continued rhetoric around trade issues and tariff issues, which I think will spill over into the currency markets and cause elevated volatility. And so that is a concern for me. And obviously, that would lead to volatility in equities as well, because as with many emerging market equities, we have seen P multiples rising to new highs in many markets, including in India, while earnings growth has been somewhat tepid. And the worry is that even as earnings continue to improve, what are the chances that external factors, be it currency volatility, higher interest rates, reversal of ETF flows, cause these P multiples to contract in a short period of time? So that would be the concern.
Just to challenge you, though, on that actual thesis, I'm not saying you're wrong then, but there's a view there that if something would have happened, it would have happened already. Your thoughts on that?
Well, I think the markets globally, to my mind, are a little relaxed about the trade issues. I believe, on the other hand, that they will intensify. These are not issues that I think will get resolved very quickly. Maybe they continue to simmer for a few more quarters. And some of those anxieties may get reflected in the currency markets. We're already seeing that with depreciation in several emerging market currencies. And also, we do see anxiety in terms of dislocation of international supply chains or the reduction in global trade as a consequence of this, possibly. So I believe the markets should pay a little more attention to these issues, at least in the next quarter or two.